U.S. stock markets posted mixed gains last week, with the Dow flirting with record highs while tech and semiconductors cooled off. The historic Putin-Trump summit in Anchorage grabbed global attention but ended with no breakthrough on Ukraine, leaving markets braced for more diplomatic uncertainty. And as we approach the final stretch of Q2 earnings season, healthcare shines while small caps surge and investors look ahead to the latest results from the industry leaders. Stay with us. It's the weekly market update from CB3 Financial, and it starts now. Last week, U.S. markets kept investors guessing. Early optimism centered around expectations for a possible rate cut, sending the Dow Industrials higher to its first intraday record high of 2025. Now, that's kind of hard to believe, isn't it? Because the S&P and NASDAQ have been hitting constant highs, but the Dow just finally caught up with that. But that enthusiasm faded as cautious guidance from big tech firms weighed on the S&P and NASDAQ. So the Dow really helped us out last week. So the Dow was up 1.7 on the week, powered by healthcare, especially UnitedHealth Group, which soared 12% after Warren Buffett said, hey, I'm going to buy a lot of this stuff. S&P 500 did manage a 0.9% gain, NASDAQ up 0.8%, so the record closes ended by midweek, but the S&P did manage to close at a lifetime high on Friday. Russell 2000 also outperformed at 3.1%. Glad we have some representation in CG with small cap stocks. By Friday's close, all major indices were up for the week. But again, as I said earlier, tech cooled off and thin August trading. Remember, this is the second slowest month of the year. September is the worst month performing for the last 50 years. Anyway, the NASDAQ continues to lead year to date, up 12%, S&P up 9.7%, and the Dow up 5.6%. All eyes were on Anchorage as President Trump and President Putin met for their first summit since 2019, hoping to address the Russia-Ukraine war. The summit broke the ice for direct talks and for future talks and was Putin's first visit to the U.S. since the start of the war. The diplomatic theater was front and center, with both leaders arriving on Air Force bases to military fanfare, flanked by key secretaries and envoys. But when it came to substance, the outcome was at best ambiguous. There was no public deal on Ukraine. Instead, discussion centered on broad peace terms with little immediate progress. Trump sounded optimistic but conceded no breakthrough, while Putin leveraged the meeting to appear less isolated globally. For the markets, the lack of significant movement kept geopolitical uncertainty alive. Investors will be watching how Trump coordinates with NATO and Ukraine in the next phase, as well as any new sanctions talk. As I said earlier, healthcare was the star this past week, anchored by UnitedHealthcare's surge and upbeat results from Eli Lilly, Merck, and several biotech names. It was interesting to me that Warren Buffett, with the surge in Apple, actually sold thousands of Apple shares and bought UnitedHealthcare. And that's often the way it works, moving from aggressive tech shares into more conservative healthcare shares as the market is starting to lose some of its energy going to the upside. Small cap stocks rallied as falling rates eased financing concerns, and that's a great thing. The Fed really has to get on board here because the market is fully anticipating a quarter point at the SEP meeting and possibly even later this autumn, seeing another 25 or 50 basis points in addition to the September cut. Tech megacaps cooled off after several mixed earnings and tepid forward guidance from chip makers and software giants. Intel rose modestly on speculation regarding federal investment, and consumer stocks reported steady demand but hinted at slower retail momentum. So economic data was mixed. July inflation was steady at 2.7, but wholesale prices climbed sharply at 3.3. Obviously, this inflation component is something we are very carefully watching at CB3 Financial, as is the Fed. Retail sales grew just 0.5% month over month, in line with forecast, but signaling caution for the back-to-school retail season, which is second only to the Christmas season every year. So in the week ahead, all eyes turn to the big wave of quarter two reports this week. Major companies include Palo Alto, Fabrinet, BJ's Wholesale, and some other biotech and industrial leaders. Investors are also watching for consumer sentiment, inflation measures, and any update from Washington and Moscow on the post-summit fallout from the meeting in Alaska. Which one of the two leaders is going to claim the bigger win from that meeting? And to all of us, it looks like nobody won. August volatility is likely to persist as trading volume remains thin because so many market participants are on vacation, and the market processes earnings, Fed moves, and global headlines. So here's the message this week. Opportunities emerge as leadership rotates. Healthcare, small caps, and select value stocks are catching bids while big tech consolidates. We are still a believer in big tech, and we remain firmly placed in the holdings that we have in all three of our programs. The Putin-Trump summit adds a layer of uncertainty, but for the moment, macro risks haven't derailed the bull market's progress, and that's why we stay fully invested. Stay focused. Keep scanning the tape, and remember, August often rewards those who look past service level turbulence. That's again why we are staying fully invested over the summer doldrums here. So we will see you next time a week from now. If you did not hear the CB3 Live August show from last Thursday, please give it a listen. There are lots of topics covered there that we don't have time to cover here. Stay with us, stay cool, and enjoy the rest of your summer, and we'll be back next week for the CB3 Weekly Update.